Yo, what's up, everyone? What's up? We are back with this video that we talked about. Let's take a look at gold this time. Again, because we've always been analyzing gold and that's 100. So let's take a look at gold. Let's take a look at gold. Let's see how um we would have, analyzed it. We would have seen all these major moves that we've been seeing, that's been happening, just like these tens up to side, down here, up here, going down, and then how we've expected this, and then going down again, just to catch up with the market actually. So using the Elliott waves and what we talked about is you pick a starting point, and then after you've picked the starting point, you know how to abide by the rules. So if we're saying we're gonna start here and then going this side, right? So if we're starting over there, wait, and then you're gonna be looking for we're gonna be looking for we're starting over here because this is the highest point of the market right over here, right? So let's put the horizontal line where it started everything at this price, right? 1987.43. So this is it, right? So now we're going down. So let's see. As we're using the illustrators, we start by counting everything. So we need an impulse and a correction, and then we take the S1 and 2, and then we're making 3, and then we need 4, 5, right? To complete the cycle, and then after we complete the cycle, we need an ABC pattern in the opposite direction, right? So let's try to look for that. Let's try to put that in practice. So this is what happened, right? So we had our impulse. Okay, so I'm gonna put the path first. So from here 0 out to this one. This was our first impulse, and then our first correction. So I was like, okay, what if we make this 1 and 2, and then we try to make those bearish entries from this point and going down. So if this is 1 and 2, and then we need a wave 3, which is the longest wave actually, and it really did happen. It really did happen. And what we must put into our mind as well is that 3 and 4 must not touch this top of 1 over here. So let me just do this. Let me just do this. So this, if we're making this 1, because that's a top of 1. This is not the top. This is actually the bottom. So if you're saying 0, 1, right? So 4 must not touch this price. Must to respect all the rules that are guiding us. So 4 must not touch this price, right? So here we go again. So it is 1, 0, 1, 2, and then we need 3, right? So 3 can end anywhere it likes, but there's some tools that we use to guide us and then to predict where 4 may turn, or where it usually turns. So 3. So and then this is what happened. So the price really did rejected over here, and then what we need is 4. But remember, 4 must not touch this, because this is where 1 actually terminated and then made 3. So made 2. So as you can see, we did not. So if you expect to make some entries, when you try to complete the cycle, when you make some entries at 4, you must remember that, okay, I could make these entries over here, and then my stop loss at this price over here at the bottom of 1 where 110. So at this price we make the stop losses, because if it touches there and then everything is wrong, your count is wrong. So so it was like this, and then we made our 5. Great, right? As you can see, everything is nice. So I said with 2, usually it's 50% when you're using the Fibonacci. Usually 60% the golden ratio, but we can also take 50% into our consideration, because we an acceptable percentages when you're making with 2. And then all these other percentages, but not completely touching this line at the top, because you would have violated everything right now. So everything still stands, and then wave 4 is actually the last percentage for wave 4 that is acceptable is 38.2%. So we do accept 23%, and the last percentage is 38.2. So at this point over here, we was gonna do this where 2 started started over here, then you put your Fibonacci, you're going downwards. So you just right now you're just trying to find wavelength of for determination point where you could place your entries and your stop losses and all. But we did talk about stop loss. So this is what happened. This is 38.2 exactly where it's end. So as you can see, it's 10 over here at 30.2. So this is where you make your entries 30.2, and then you put your entries, your correction entries, and then you write the price lower and lower and lower to complete the cycle. And then now we are going to 5. So this is great. This is great. This is great. Let's remove our Fibonacci. Great. So right now what happened is an extension. This is what we've been, omitting, and we haven't been talking about the extensions in the market, because as you can see the wavelength of 5 right now is longer than the ones we used to talk about. But usually I was like, okay, for starters and everything, so it was like, okay, the wavelength of 5 must not actually must, but usually be equal to 1. I'm saying the wavelength of 1. So you just take this from 4, where 4 started over here at the top right there, and then you would have expected 5 minutes down here. But as I'm talking about extension right now, so extensions happen in the market. This is why you need to be flexible with this, and do consider that, okay, we are in a bearish trend. We may not really terminate from where this line is telling us that we're gonna, you know, over here. Just be free to keep it going down and down, because this is just a bearish trend. So do not limit yourself. But extensions happen in the market, as you can see. But as I've put this channel down here, you would have like expected it to be the one to tell you, okay, right now there is something like this you need to expect. Because after we've broken it, you'll be like, okay, this is my signal. This is what I needed. This is what I needed, so that I can consider this changing direction, giving us our APC. So let's close everything, because right now we terminated down here, and then let's put this in a box. Let's put this in a box where it's the last price. This is the last price where it's terminated. So as you can see, these are the motive waves. We call these are the motive waves. So let's number them. Let's number them. These are the motive waves. So 1, 2. So now you understand how do we omit some other parts of the waves, because there are some corrections within these counts, and just like this one, this correction in the opposite direction, and then we could. So somebody might be like, why did you just omit this one and do not maybe start over here as 1, 2? It is always about where you started. So if you started over here is 1, 2, and then this is not was not gonna be 3 and 4, because already it's touching this price. So maybe you would have taken this one and then all the way up to this point where it did not touch the top. So this is how we omit other things, and this is how we put some other waves within some others, as I've started to count these ones, and then this is gonna be a 4, and then you could also make it 5 that you are looking for, and then you are done with your cycling. These are the motive waves, and then what you want now, the corrective waves, right? So let's look for the corrective wave. So you know what happens after you make the 5 is an APC pattern in the opposite direction. So what you needed is just an APC correction and a type of a structure. As you can see, it's over here. So it was ready to number this one APC, I mean APC right at this peak, because everything just at this peak. So this is your APC in your opposite direction, and then you expect the price to continuously go lower and lower. Remember, these motive waves, they are just making wave 1. So all these, they just tend to be made to be wave 1. So all this is just now wave 1, and then this is wave 2. Remember, wave 2 is a corrective pattern. So usually corrective patterns are just made of an APC pattern and APC pattern and APC. So this is wave this is a correctional pattern, I mean correctional wave. So it is just with two, and now you are just making with three, just like what we did over here. So we are now in the process of making three, and so we are expecting this to be going down even lower and lower and lower. So now we understand how we would have expected this, and then this decline over here. Very, very much expected this one. We are not just surprised. Wait, why I call this declining? This is maybe what is, this is the only thing that would have surprised you. But all in all, this is expected. And then after you got surprised by this, you know, okay, which my less resistances are these ones, and then you go up here and then you put your lines, maybe you put your lines, maybe, and then you expect this to bounce back down as it is bouncing. So or maybe you could just extend your correction because the degrees also matters of the corrections. So maybe this your APC was just not enough, or maybe it's just an XYZ pattern, as you can see. See over here we do have 0 W X Y, right? So, so what is actually happening? This is how you know, but sometimes I just don't want to use this W XYZ patterns. I just expand this. I just be like, okay, this is the actual APC, not this one. So it is just this actual APC in a bigger degree, because I just understand that, the degrees, as we always talk about, the degrees matters. There is some kind of correction that cannot really hold the price lower and lower because its degree is lower. You know what I'm saying? So this cannot really make the trade that you're looking for, because everything now is in a higher degree. We are now making a huge structural market of one, two, and then three as the long sweep. So we really need to decline further beyond these lines, going down and down and down and down. And then remember, when we're making that four again, we will not touch this line because this line is the bottom where one is at. So we just, when we're making four, we do not touch one. We just do not. Remember that. So this is one, right? Now you remember that. This five just became one over here, and then this is how I expand this APC. I was talking about this correction. This is how I feel like, okay, but really I should be using this XYZ because really it is that pattern that is happening, because you just cannot deny the facts. You cannot. But I was just kickstarting you to the strategy. Now we just it's a little bit of advancement we're doing here, because APC, we just met that APC that we wanted. But some other people will be like, okay, sorry, because I've talked about right now, I've talked about those waves within waves that I was talking about here. I was like one, two, and then it's gonna be three, and now we're just making that. You could also just do not use this one, this XYZ, or just be like, now we are restarting, because you just always at the point where you make that 10, that if that 10 happens, like really at this price, it is now a restart of something else, which is wave three. So wave three will be made of mono waves. This is what I'm talking. It will be made of mono waves. So if it is made of mono waves, it's gonna be like maybe uh, not maybe, it's gonna be one, two, three, or some kind of APC structure, a zigzag structure, like a huge degree up to that thing, right? But over here you could see that, so it's now one, two, it's now 0, 1, 2. Some other people would approach this like that, but we're just approaching it like this because really we are just making a correction, as you have seen in impulse. That's another fact. Just this has been going down like this, and then now correction, and then we just need to continuously follow. So if it is a correction, and then you're gonna use this XYZ. If it's a correction, XY W XYZ. Why am I talking about X? because there is another person which has WXYXZ, right? I'm still gonna show you that. It's just right now it hasn't, so I'm confusing. So this one is just WXY, not XYZ. Um, so as you can see on code, only this is only what I wanted to talk about. So we'll be shorting it, shorting it, and then continuously continuous up until we feel like the structure. We've been shorting it actually. We short this over here. I mean over here at the channel. Some people are there on our channel, on our public channel. So on Telegram, we shorted this up to this point. We have taken our profits, and then we was expecting this, and then we shorted over here. We put some stop losses exactly at this line as I've talked about, and then we was just making five, and then our TP was somewhere over here because we didn't really expect this extension, but it happened. So we are lucky that it did, but we just hit our TP then, and then it just went down over here, and now it goes back up. We're just not gonna be buying because this is just a bearish overall trend. So overall trend is just bearish, so you don't go against the trend. We could buy over here and then this continuously go down. You know what I'm saying? So we just waited, and then we tried to short it over here, and then we had this, and then we had this. We was like, wait, this we started stressing ourselves. Okay, we was like, oh, okay, don't stress yourself because this this usually happens once you deal with this more and more. You will, I mean, often you will see what happens. And then we had this pull over here, and then again trying to short everything, which is like Nasandra. If you can check out Telegram channel, you could see everything. You could see everything that we talk about in this YouTube channel. We always talk about our channel on Telegram. We post everything, we share everything. I guess this is it. I guess this is it. So let me just try this. Um, Here you could just be like this, just to depict this. Even if you entered here, but it's some kind of a little late right now. You could wait for it to go down, and it will eventually come up again, and then you short it, you short it, you short it once it's more convenient for you. You're gonna see it. You're gonna see it. So thank you. If you are new, please hit the like button and then subscribe.